The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray feeling good, Louis. I have a very important announcement, folks. Do not miss tomorrow's show. We are going to have Joe DiNapoli on for the whole hour. He's going to talk to us about his election predictions. He's basically telling us that it's going to be a 70-year-old white male is going to take over the presidency, but he didn't know when. That was a little joke, folks, but he's going to be doing that. And he's also going to be talking about which stocks will benefit, which ones will suffer. He's going to talk about the value versus growth discussion, and are we rotating in this market to move lower? Specific buy and sell points in popular stocks like Amazon and Tesla, and also specifically how he takes advantage of Skynet control in our equity markets, and also to take advantage of excess volatility, and along with a whole bunch of other stuff. You'll have time for questions also. Joe's been around for a long time. I met him in 1971, and we've been friends ever since, and he'll have a really good show. And also today at the break, we will have as our guest none other than Rich Anderson, who's going to be talking about the situation going on in Minneapolis, plus some really interesting things about volatility and rotations in the stock market, and also in the grain markets if you have any questions. So let's just move on here, and we will get moving here to ask any questions that we might have. By the way, we want to thank our good friend Mr. Z for alerting us to that coffee trade yesterday that started to work pretty good. If you're in the coffee, use it as a break even now. You don't want it to go to a loss. So try to, keep those things in mind. It's not how much money you make, it's how much money you don't lose. All righty, I posted the charts that we usually look at first, which is the German DAX, and as you can see here, we're making a major ABCD here down with a week before to go for the election. If we take a look at the FTSE, it's still weak also, just like our markets are weak. But they're not nearly as weak as we might think, folks. Just yesterday was a really negative day in the market, but if you take a look at it from a standpoint of the standard deviation on the move. Let me get this up here so you can take a quick look at it. We'll start with the E-mini first, and then we'll move over to the DAX, to the NASDAQ. It's not DAX, it's NASDAQ. But here's what we had yesterday. We had the market break below that key level at 3,400. We mentioned that probably half a dozen times yesterday. If we went below that, there'd probably be a lot of selling, and it was. You see, we came down. When we got down to 33.55, folks, we were down one standard deviation, basically 3%, if you wanted eyeball, quick and dirty method. But when you get one standard deviation, the option sellers that are in there, the people that are doing the option selling for people that like to buy options, they don't like to lose. And if we get beyond a standard deviation, that's when they really get nervous and the market starts to accelerate rapidly. This time it stopped exactly at that point in the Dow Jones, the NASDAQ, and the S&P. So that's a very important spot. You got to circle that 33.55 in the S&P. So it did complete it. You'll notice what's happened here over the past 7 trading days. We had a 50-point rally back on October 20th. We had a 60-point rally back on October 23rd. And we had a 52% rally last night, and that got up to a 61% retracement of the high on Monday. Plus, it was a 50% retracement of the high on Friday. And we're having a lot of trouble getting through the 3410. If we get through 3410, that will tell us. Now, this is a very positive bottom, folks, possibly, because this is a big correction. Remember, we're coming down from October the 11th, so that's a very, very move down. That's it. So take a look. Tucker is saying about how much he liked the Best Loser Wins by Tom Hugard. Yep, it's a wonderful piece. I hope you all got it. I posted it in the room. If you want me to, I could probably do it again if you wanted me to. But let's move on here and take a quick look here we want to look at the NASDAQ also. Let's get it up here. I know I brought, here we go. NASDAQ was a little differently. Now, this was interesting because we've hit this NASDAQ area here. Now, this is a 15-minute chart, and you'll notice that it went exactly to the 61% retracement of Monday's high, and it hit it 4 times at 11,561. That was telling you that that's a very, very strong resistance point. It was there for well over an hour and a half, and I think we sold off a little bit this morning from that level. I would be watching 11,478, about 100 points lower in the NASDAQ to see if it's going to hold support. Now, do we know whether it's going to hold support or not? Of course not. But you know what else, boys and girls? Nobody else does either, and that's the best part of looking at that. Now I have another human interest story, folks. You're not going to believe how cold it is here in Tucson today. We have snow on the mountains behind us at Mount Lemmon, and it's 36 degrees. That's 4 degrees above freezing. We were 84, folks. We were 84 yesterday. It's a 50-degree drop. And believe me, folks, it's chilly out there. So if you can do anything for the homeless, if you get a chance, try to do it, because a lot of people have a whole lot less than we do. So try to give them a little help if you can, because it's getting cold here. It's getting cold everywhere. And I'm sure where Rich lives up in Minnesota, it's got to be colder than a grave digger's rear end, but it's going to be, winter time is coming. That's all we can say. 9 degrees yesterday. Where do you live, Duffy? Alaska? 9 degrees? Is that Colorado or something? Wow, that's cheap. Whoa, holy cow. Colorado Springs, boy, that's really beautiful. My daughter was married at the Biltmore, was not Biltmore, what was the name? The Broadmoor Hotel in Colorado Springs. I think that's the name. A beautiful place. Anyway, let's move on here to let's move on to another couple charts that we want to pay close attention to, because I think they mean something, but I'm not 100% sure. This is a longer-term chart here now, folks. This is a weekly chart here in the Bitcoin. I just want to show you because, this has not been a bubble, because if it were a bubble, we would have went from 20,000 down to zero. All we did was hit 3,000, which was a 38% retracement on the log chart. And look where we are now, folks. We're at really major resistance at 13,500. We hit that back in April of 2019. And if we get above that, then this thing could be off to the races. And John Jameson's target on this is $52,000 a share, but that's pretty good. So we'll see what's going. Yes, they still play golf here in Tucson. That won't have an effect. They put their gloves and their hats on and they go out and play in the sun. But there won't be any sun today. It's supposed to be a little cloudy because we got some rain yesterday, which gave us the snow on Mount Lemmon. All right, let me show you that. This is a chart from Tom Hugard. We'll get this up here, Trader Tom. You notice how he's using that same line that we were looking at together? Those old lows become resistance, and that's mainly what you're watching when you're doing this. So all it is, folks, it's just a way. We'll be right back. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I've been asked to take a look at December wheat. As you can see here, we went up to the exact 61% retracement expansion of that whole move. Notice that it stayed there for 3 days exactly at $6.37 a bushel. We're now 17 cents a bushel under that. We've been down for 3 or 4 days. This is a potential topping area, of course, folks, and what we're looking for now is instead of trying to pick a top, is to find a very low-level short-selling opportunity here in the next 5 to 7 trading days, because we're down about 5 days now, so we expect a little bit of a contra-trend move back up to maybe the 632 level, up about 12 to 15 cents from where we are right now, but we're not even close to that yet. So you really have to wait, because it's very, very important. Now, you know, if you remember way back in August and September, Mr. Z was in the room here talking about the potential here for December wheat. You know, you can see that very first last support area that was exactly at the 78% retracement. Then we went up, and then we made the critical. You'll see the red Fibonacci, the red ABCD line. That was a 382 retracement exactly to $537 per bushel, and from there, you know, we took off and just kept going higher and higher. But right now we're in an area where we should have some major corrections, but it's still a little bit early, but we'll do it one thing at a time, and that's really about all we can do for sure. You just got to do one thing at a time in just about everything that you do. So right now, the key things to watch today are the price of 3410 in the S&P and 11,561 in the NASDAQ. Those are the ones that are very important. We're at 3397 here in the S&P right now, and the key level, of course, is 3410. If we get above that, that's important. These are what these support and line and resistance lines mean, folks. These are just natural Fibonacci lines. And when you go through them, you'll usually move to the extension, or you'll pull to the retraction. That's really what they usually do. And if you add a little simple pattern like the ABCD or the butterfly or the 3-drive pattern, that gives you some factors that you can control risk, because that's really all it is. By the way, I wanted to thank everybody for the response that we got from Tom Hugard's 25-page paper called "The Best Loser Wins." Probably one of the, without doubt, the best 25 pages that I've read in years. And I had wished that Mark would have been alive so he could have read it, because I know he would have loved it, because he wrote in those terms, and it would have been very interesting to see how he does it. But Tom is different. He's incredibly successful, and so you want to try to get inside of his mind. And boy, that paper really does it. So it's pretty cool. Okay, now, please post again. We can do that. Hold on just a second. I am able to do that here. Hopefully we'll be able to get it in here. Here it is. It's the best loser wins. There it is. If something happens that you can't get it, just drop me an email, larrypesavento@gmail.com, and I'll be happy to send it out to you, because it's pretty good. Now, when Rich Anderson is going to be on here at the break in about 8 minutes, and he's going to talk to us about some of the stock things that he's paying attention to. He's going to talk to us a little bit about what's going on in Minnesota with the election, and specifically in Minneapolis about the defunding the police, which is something that we all have to keep an eye on. Now, here is a chart that we watch very closely, because I think this is what, I hate to use the word hope, but let's use the word anticipate. This is the gold and silver miner index. And as you can see here, we just had a beautiful Gartley up there at that 41.25 level. That was a couple weeks ago. And this is when the gold was trading up around the 1950 area, I believe. We're down at 1906 right now today. And we're looking for this thing to get down to possibly this 34.50, 34.60 level, where you're going to have a perfect 78% retracement and also a 1.618 expansion down there. So if we get there, you want to pay close attention to that one, folks, because that's going to be a really, really important pattern. Now, on the other side of the coin, if we get above 41.50, this will tell us that gold is ready to break out. But that has not happened as of yet. And believe me, with these next 5 trading days here in the market is going to be something that is going to be very exciting, because, oh my goodness, we're getting ready to move over to November again. Wow. Oh, we've got 1, 2, 3, 4. Wow, we've got 5 trading days left to the election. We got 1, 2, 3, 4, 5. Whoa, shut the front door and raise the rent. It's going to be crazy. I would imagine that the volatility that we're going to see on the election night is not going to be anywhere near the way it was back in 2016, because in 2016, Mr. Trump had about a 9-to-1 chance of becoming a president, and of course it turned around, and whatever happened, he got the votes, electoral votes, evidently, and that's what made the difference. This year, it seems like it's going to be a lot closer, I guess, as we approach the election. But frankly, I watched PBS, the PBS station, which is supposed to be is about as what do you call it? I can't think of the word. They're not supposed to be very biased, and unfortunately, it's still biased, but not nearly as much biased. Thank you very much, Mr. Z. Impartial, unbiased. This is good. These are good words. I appreciate it. All these smart guys you got in here. The hardest part of doing this show, folks, is you got to prepare. Try to get something interesting. And folks, what I do is so darn simple. I'm looking at patterns. That's all I'm looking at. And, I don't try to make predictions. What I try to do is to find entries that you don't have to risk very much. So I sent that a perfect example of that was about 2 hours ago, because we had been here for 2 hours. I'd sent this on the NASDAQ. You can see it was trading at 11,547, and I sent it out the first time at 11,561. And now we're trading, substantially below that. Not a lot, but we're trading a little below. We're trading at 11,530. So if you happen to do that, you want to put your stop at your break-even point so you don't have to risk anything. But the key level to look at, let's just quickly, because we've only got a few minutes here, since we hit that number in the S&P here at 34. Oh dear, 3409. What you want to watch this morning, this is going to be really, really important. So pay attention, folks. It's 3390. Watch that. We're 7 handles away. If we don't stop at 3390, there's trouble in River City. So write that down. On the downside, it's 3390. So you figure give it a few points, 3387. And on the upside, it's 3410. Give it a couple points there. So that's your range. You get above that, bada bing, bada boom, you're looking at something that could be pretty interesting. Because on the shorter term basis, since October 11th, we're in a downtrend. We'll be right back with Rich Anderson.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Rich Anderson on the line today. Rich, are you there?
Yes, sir, Larry. Good morning.
Good morning, dear Rich. I'm going to take a second here. It's somebody that you've met before, but I've got a human interest story you folks might like since you like baseball. Wes Parker played for the Dodgers from 1964 through 1972, retired in 1973, and the first thing that he did was he bought a new house in Los Angeles and Pacific Palisades. That's on the Pacific Coast Highway just south of Santa Monica, right before Malibu, and it's right above the Will Rogers State Park. It is one of the most premier places in Los Angeles to live. Ronald Reagan lived in that area. But anyway, Wes bought this house for $90,000. It's 8,000, I think it's 8 or 9,000 square feet. And he put it on the market a couple months ago, and people started bidding for it. He sold it for over $8 million, folks. Can you believe that? And he paid $90,000. He put $250,000 in it during the early 70s, doing remodeling and stuff. But he lived in that house all by himself. And anyway, a great guy, still alive, doing well at 80 years old, and God bless him. Rich, sorry to bother you, buddy, but our friends wanted to hear some real estate, and I know you met Wes before. Hey, listen, what is happening with the defunding situation in Minneapolis?
Well, it's going to be an interesting election, not only here but everywhere. You know, Minneapolis is so blue that it just doesn't matter. You know, the young people shut down any quiet, majority type people, and it's just a different world there. But it's 14 degrees here today, Larry. You know,
it's 35 here.
To be outside celebrating. You're mad about this or that. It's too cold.
It's 35 here, Rich. We have snow on Mount Lemmon behind us. That's how cold it is here.
Yeah.
Well, there's global warming for you. Rich, you sent me a chart today about the S&P over in, I guess it's a German company, correct?
Yeah. They this shows you, keep in mind, I'm a farmer,
Yeah, right.
We're getting out of my lane here, but because I don't know very much. But, they gave a warning and the little stock dropped 21%. I think you had a similar situation last week with Fastly. Again, it's another stock, and, I know more about corn and hogs than I do about stocks, believe me. But that one dropped, I think, 27 or 28%. And so there's a ton of money that's out there, and it's been pushing things up. But when you've got value funds buying these stocks that are 100 and 200 times the potential next year's earnings, are they really value? I have to go with somebody like Howard Marks that, you walk when everybody else is running.
Yeah.
You have to be careful here.
You sent us another chart about the derivatives and how the flows are running. You want to explain to the folks what you're looking at here on the flows versus the fundamentals?
Well, that's just the amount of money that's being thrown at these markets. And you can see that it's like the tide coming in. Everybody's been to the ocean. When the tide comes in, the water rises. And when the tide goes out, the water comes down. When the tide goes out, the water goes down. Well, the money's been flowing into these markets, something fierce. A lot of that money has been pumped in by the government, particularly in the bond market. I mean, if you look at Japan and the percentage of bonds they own and how the Fed is now starting to own more and more bonds, and that's made a huge difference. I mean, it's money flowing in and money flowing out. Well, the market's come down these last couple of days because the stimulus deal didn't get worked out because Nancy feels it's better to wait until after the election because then she'll have more power and her issues are different than the administration's issues. The issue should be the welfare of the people of the United States, but when they have agendas, particularly right now, it's just too close. Who knows how the election's going to go? All I can say is that Brexit was a weird deal. The spread between what these pollsters are forecasting at 10 and 12%, and what the betting money, the line, where the money is at 40 to 42%, that's probably the widest it's ever been. So there's huge macro risks. So you got to be a little careful with the political situation, the COVID situation. I actually looked. I don't know if I sent you a chart. There was a chart from WHO this morning about hospitalizations and how it's going down in Spain, even though the rates are rising everywhere. And that's a big deal. I think they found some efficacy in the ways and the protocols they're using to treat so that they don't need as much hospitalization. Contrast that to, say, a state like Utah today is saying that we're being overwhelmed and we're going to have to ration our ICU beds based on, your age and probability of overcoming the disease. I mean, that's a little scary for us old-timers like you and me. But,
I'm not going to Utah.
That's the reality of what we live in.
Yeah, boy, that's amazing. Of course, the death rates are still relatively low. I mean, they're still around 1% or so.
They're very low. And in fact, in Spain, they found, your friend Jack sent you that one podcast where they talked about some of the protocols that they're using in Spain. And I think that WHO chart shows you that there's efficacy in what they're doing. But in the meantime, in the markets, you got to be a little bit careful. Last time I was on the show, I think it's around October 6th or so, I said, going to the grocery stores and seeing the shelves empty was kind of a shocking experience to the people in the United States. Well, that's kind of been the experience the grain exporters had ever since that last surprise in that report. And the USDA is still not pushing up their estimates for demand. The Chinese have bought, roughly we calculate 71% of their commitment, $23 billion worth of stuff right now. It's interesting. In Russia, they're saying we're maybe going to limit exports in January through June, trying to force their farmers to sell wheat right now, but their prices are pretty good. And so they've already got the cash they need, and they don't really want to pay the taxes. And down in Argentina, in Brazil, they got the opposite problem. Again, the farmers have had a pretty good year down there, and they're not willing sellers because, they've got some money in the bank. And in this country, harvest came out last night, corn 72% done versus 38 a year ago. We're way ahead on harvest. Beans are 83% done versus 57% a year ago. Once the harvest is done, it's in a bin. I'm not going to take it right out of that bin and move it to market. So the pipeline demand is going to keep these prices strong. Back in October, I told you about the rain in China and what a big deal that was. These are the deals that are going on now. And then the 41% good to excellent, which was kind of a surprise to the wheat market last night. And that's of concern. Now the El Nino, that's going to probably affect the southern half of Brazil and eastern part of Argentina, which that's what the La Nina effect will do. They had some rains and showers in South America last week.
Hey, stay with us, Rich. I want to ask you about the put-call ratio and stuff. We'll be right back with Rich Anderson, folks.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The gold report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The gold report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The gold report comes with a 30-day money-back guarantee. Go to TFNN.com and order the gold report now. Protect your buying power. Order the gold report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Direction's daily S&P 500 bull and bear leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Rich Anderson from Minneapolis, Minnesota. Rich, the question that one of our listeners has asked us, has there ever been a Republican elected in Minnesota or in a senator in the last 50, 60 years?
Oh, sure. We've had a lot of them. Senator Norm Coleman was the most recent one, and then the second time when he got beat, he actually won the election, but then they did a recount and they canceled 4,500, 5,000 votes in the western suburbs, and seemed to have said they weren't correct. Yet the same, signatures and stuff in St. Paul, Duluth, and Minneapolis, they found fine and found an extra 5,000 or 6,000 votes, and that's Norm was the last senator. But yeah, we've had a lot of Republican senators over the year. I think it's a fairly close race here because we had the riots this summer, and when you burn down $400 or $500 million worth of property, it kind of upsets a lot of people. And when they then say, well, maybe we'll be better off with no police, that upsets a lot of people. But yeah, there's interesting things. It's just you have to be able to intelligently manage your risk, and I don't know, how to do that when we have lots of macro things that can throw a curveball at you in the next week or so. So you change your trading to a little shorter term, trade a little less, but it give you a comparison of prices. Right now in Brazil, beans are freight on board, FOB, at $5.10 versus U.S. price it's $4.62. Do you think the Chinese are buying U.S. beans because they like it, because they've done a deal? They're going where the best price is, right? Mm-hmm. Yes. And we know they need corn, but, corn harvest, 72%, it's almost done. The bean harvest almost done. And when you've got export demand, that creates pipeline demand, and the pipelines have been flushed going straight to the Gulf for export, and the farmers almost got it all in the bin, so the farmer selling is going to slow up. This is what's going on. And then take Ukraine, they think the corn crop might have been overestimated by 6 million metric tons. In Russia, they think it might have been overestimated by 2 million metric tons. So, you got lots of interesting things going on. About the middle of next week, maybe we'll have some clarity and be able to see things. But for right now, the macro political risk, the COVID risk, and the lack of stimulus, the thing that nobody's talking about is if there's a blue wave, they'll have stimulus like the thing, it'll be coming out your ears. Elizabeth Warren wants to be the Treasury Secretary, And believe me, Biden won't have any control over who gets to be what because, too many people are running the ship, and he isn't one of them. He's just the figurehead. And it's going to be interesting. Now, if there's a split, then it'll be much harder to necessarily get things done, and the stimulus might not be kind of quite as crazy. So, I'm looking to try and get big picture reads, like when we had the rain in China. That's a huge event. There's a huge event coming at us. We've got to at least see what let them pull the curtain back and see what that event is and how that's going to shake out. And we might know on Wednesday, and it might be weeks later that we know. It kind of depends. It's very interesting. Here in the little town I live in Eden Prairie, we had 2,000 people voted early last time. There's been over 18,000 out of 43,000 roughly that have already voted. I mean, the percentage of people that are voting this time is probably going to be a record high. It might be even as high as it was in 1920, as an example. So there's a lot going on. Both sides are working hard. They both have their arguments. And we'll see how it shakes out around the country. And the Senate is what I'm watching the closest.
Yeah, that makes good sense. Do you you still go to the flagship? Oh, you don't go out anymore, but you used to go to your flagship.
No,
do you still have
the contacts? Going to a health club right now is one of the riskiest things you can do.
Yeah.
I work out every morning. I worked out an hour before you called me. First I go to church, then I work out, But I want to get back, but it's just not the place to be right now.
Wow. Yeah, that's pretty scary, that's for sure. Hey, listen, I want to but hey, I never did get the question answered. Did they defund the police there in Minneapolis or not?
No. They had a commission that looked at it, and they said we're going to have to study it more, so it won't be on the ballot for this year. So that gives them 2 more years to come to their senses.
Yeah, that's for sure. Just remember what Samuel Colt said. God made man equal, but God made man, but Sam Colt made him equal. So remember that.
Yeah, I know.
Hey, listen.
But it's hard to find ammunition in a lot of states.
Oh, my goodness. On Saturday, I was checking some ammunition for a 32 short Colt that Byron has. It's hard to get, so I went down to Murphy's, which is our largest one here in town, and there was a line of about 20 people out there, and they were social distancing and stuff. They were letting them in 2 at a time. So I asked one of the guys, I said, why is the big line? He said, we're trying to get what ammo we can, and they were only allowing one box of shells, no matter what it was, whether it was 22 or 30-06, you could only get 1 box. And then at 10 o'clock in the morning, the next day, they were totally out. There was no ammo in Tucson. I mean, this is cowboy country. Everybody has a gun, so it's really amazing that the ammunition is disappearing. So we'll see.
The safest place to be, Larry, is at the Apple store, because there's all kinds of security with those new cell phones that are so high priced. I hear at the Mall of America, they had, policemen in uniforms, private security. It was like a vault.
Wow. Hey, we've got a question from New Jersey from Jeff. Go ahead, Jeff. You want to go ahead and ask Rich?
Yes. Hi, Rich. How are you?
Good.
Great. Listen, I have 7 different crop reports. Of those 7, I know 3 of those are significant and can move the market. The other 4, I'm not sure if they are significant or can move the market or not. I wanted to ask your input on that.
Well, here's the problem, Jeff. I mean, what the grain analysts do is they look at every report going back, say, 20 years, and how much did it affect the market when it came out? Did it go up 2% or down 2%? But then every now and then you have these adjustments, like the surprise we saw a while back that you know all too well, and those adjustments are what makes an inconsequential report all of a sudden become a huge report. Right now, the USDA is still projecting that we're going to have 178.5 bushel an acre yield. That isn't going to happen. They know it. We know it. Eventually, that'll be adjusted, and they can do that on any one of the reports that can come out, and say, well, we've been thinking about this, so we're going to adjust the yield down. All you have to do is look at the good to excellent rating conditions and know that and look at the yields in Iowa, that just isn't happening this year because, we've kind of had a wreck. When are they going to do that adjustment? They could do that adjustment at any time, so you can't make a blanket statement.
So, Rich, I'm sorry.
Report.
I understand. I'm sorry to interrupt. So
Jeff,
those would be unforeseen,
Jeff,
and you wouldn't know. But these 4 crop reports, I just wanted to read you the names. Those are known. They come out on a regular basis, and that's really what I was interested in. Can I read you those names?
Stay with us till after the break, okay? We got a break here, and then we can answer that question.
Okay.
We'll be right back, folks.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, bam! As well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Jeff from New Jersey, who has questions for Rich Anderson. You want to continue about the reports that you're asking about, Jeff?
Yes, please. Well, it sounds like we have more time now. Maybe, how about if I just read all 7 names? There's only 7, names of the reports.
All right,
Rich, if you could just say that, this is a market mover, or there's a, good chances it's a market mover, or no, that's not a market mover. Could we do that? Play a little game?
Okay. All right.
Okay, thanks. All right, so the first one, is grain stocks, which is quarterly.
That can be a big report if it depends on what the expectations of the market is, but that can be be a big report where they change the yield. And
great.
So
Okay. The next one is the next one is World Agricultural Supply and Demand Estimates. That's a monthly.
That's not so much.
Okay, so that's not so much a market mover. Okay. The third one is crop production. That's a monthly.
The monthlies are not as big a deal as the quarterlies.
Okay. And so there's four more. The next one is crop progress, which is a weekly. I don't think that's too important.
And it's only important during the growing season, during the critical month of the growing season, June, July for corn, July, August for beans.
Okay, so the weekly, that's we don't have to worry about that too much about moving the market.
No, it's over right now.
Okay. And then fats and oils, oilseed crushings, production, consumption, and stocks. That's a monthly.
Yeah, that's seldom a surprise there.
Okay, and just two more. The next one is grain crushings and co-products production. That's a monthly.
That's usually a minor deal too.
Okay, and the last one is agricultural prices, which is another monthly.
No, that's like the November 6th. They're going to come out with their 10-year baseline, and then they have the February report where they'll, give the full complete report on that. That's a minor deal. I mean, last February they expected we were going to plant and harvest 93.5 million acres of corn.
Well, that's fantastic, Rich. Thank you so much.
Okay.
All right.
See you tomorrow, folks. Joe DiNapoli.